27th July 2023. We're looking at Asian range breaks on the indexes or the currency aggregates. So what you see on the screen is the aggregate of all the Swiss pairs together. And these two grey lines here represent the Asian range high, and the Asian range low. So the first thing you do is you can set alarms for breaks of either the high or the low. And you do that for all the indexes. And what happens is at 7:30 GMT, you get a break of the Asian high on the Swiss. So this is indicating that there's some good potential Swiss longs, right, on this morning, 7:30. The first thing you want to do is corroborate this. So we've had the break to the high, but we want to see on a higher time frame two things. Are we with or against the trend? Number one. So if I just eyeball this on a 1 hour, it looks like we're clearly with the trend. So this makes sense. The other thing is there a realistic draw on liquidity? So you can see by now price is coming up to that draw on liquidity. But we got the signal, when we got the signal, it was here. So this is what you would have seen. Price was there, and we had this obvious drawn liquidity here. So it's quite likely that price, whatever it does afterwards, is likely to at least come up here. Whether it continues from here or rejects from here, it doesn't matter, because we've got enough range between here and the liquidity draw to look for longs. Okay, so once you have that, you know you're looking for potential Swiss longs. You can do two things from here. Either you go directly to all your Swiss pairs and look for them, or what can happen sometimes is you get a similar move at the same time. Okay, so for example, this is the dollar index, and these gray lines here are the Asian range. So we get the signal at 7:40. That's just 10 minutes later. So once you've got this dollar giving you a sell signal in combination with the Swiss giving you a buy signal, it makes sense that you should be looking for a dollar Swiss sell. And before we go and look at the dollar Swiss, remember, once you get the signal on the M5, you go out to a higher time frame. Okay, it can be the 1 hour, it can be whatever you want. That's up to you. But you want to check for yourself, what is price action actually doing here? So here, do we have a trend? Well, price had been going up. However, it's rejected off these higher time frame levels that you'd identified. And in the past couple of days, what we've seen is this low get broken energetically, this low get broken energetically. This one has been broken. So it's quite possible we are continuing down. Okay, and then where's the next draw on liquidity? So it could have been here, which has already been broken. Next one, I suppose, is down here. So you just get a better picture for what's going on. So now let's look at the dollar Swiss. We can see if we got in short at around 7:30 or 7:40. So this is the 7:40. So it's not an optimal entry from here because it's already gone quite far. Okay, and very often if you're waiting for both pairs to give you the signal, you will have missed the best entry. It'd still be in profit. We didn't get a very good pullback, so it would have been up to you to find your way in if you're waiting for 7:40. If you're waiting for the 7:30 confirmation, however, because remember, the Swiss gave us our confirmation at the close of this candle here. This is the one that's breaking the high, which you can see is the 7:30. So close of 7:30, we could have been looking for Swiss longs, which would have meant short dollar Swiss. And as you can see, the 7:30 is here. You could have taken that as a breakout of the Asian range trade. If you wanted to wait for confirmation, wait 5 more minutes. So it's closed, it's clearly closed below. So you put your sell in here and your stop behind any of these lines, so either the mid-range of this London open hour or Asia, which usually coincides with the New York midnight open here. It's 4 a.m. It's not always the same, but very often it's close enough. In this case, it's exactly the same. So you'd enter here, stop there, 20 pip stop. It's already gone 1-to-1. Okay, so this is the CAD we're looking at, and what happens on the CAD is at 7:30, exactly the same time as the Swiss is breaking its range to the upside, CAD is breaking its range to the downside. Okay, which in theory should mean a CAD Swiss short should be excellent. So before we go and look at the CAD Swiss, we just want to check what's happening on the higher time frame. So yes, we've been going down, which is in conformity with the CAD short. And then in terms of draws on liquidity, we've got a few. There's one here. Yeah, well, basically it's this double bottom here. So there's enough range to go and take liquidity. So this is the CAD Swiss, and we've already established 7:30 was the time we got the buy signal on the Swiss, the sell signal on the CAD, 7:30. So that puts us pretty much exactly here, okay, and that's a textbook Asian range breakout trade. Okay, so 7:30 is this one, I think. Yeah, so the close of this, we've just closed below Asian range. So you'd enter here, your stop there, call it a 10 pip stop, and it's been a good trade. Okay, that's gone probably 20. Yeah, you got at least 1-to-1. Most of these Asian range breaks, they tend to not, you can get really good 3-4-to-1 sometimes, but more often than not, they go 1-to-1 or a bit more and they turn around. So the trade management is up to you. What do you want to do? Stop loss to break even, take profit.